tariffs and strike a deal with the Trump administration.
Stephanie Rickard there from the London School of Economics. Now let's look at the latest profit news from BP. Investors were braced for bad news this morning, and the oil giant has just revealed in the fourth quarter profits more than halved, falling to $1.17 billion. The previous year, it made nearly $3 billion. The blame is put on lower margins in its refinery business, but actually BP has been underperforming its peers, its rivals for some time, with trouble at the top and a turnaround of CEOs. Recently appointed boss Murray Auchincloss is facing renewed pressure thanks to the fairly new investor in BP. This is the US-based activist Elliott Management. This Wall Street investor is building up a stake in BP, and some speculate has plans to force a shake-up of the firm or even a breakup of the firm. Let's get the view of Cornelia Meyer, economist and chief executive of Meyer Resources. Good to see you, Cornelia. And once upon a time, worked for BP. So, Cornelia, is it just about refining? I mean, what are they getting wrong here?
Well, it's not just about refining, but we have to be clear that other companies, other big oil, have had worse results because oil prices were materially worse this year than they were last year. This year, they fell by about 24% between April and September. So we have to factor that in. Yes, they've gotten wrong a few things wrong. It is about refining. It is also the previous CEO, Bernard Looney, has made a big bet on renewables that really didn't pay out. So it's about refocusing on the core, on the oil and gas production, which gives them more profits. They have started to act in the sense that they've taken part of their wind and outsourced it in a joint venture with a Japanese company. There's a plan to fire about 5% of people that work for BP and about 3,000 contractors. So they're doing what they can do.
Okay, and we are expecting a big sort of vision statement later this month from BP, quite soon, I'm told, where they will outline in more detail what their plan is for the future, especially when it comes to renewables, because as you say, the oil and gas is what's making them the money, and whereas their investment in renewables is not bearing fruit. But what about this activist investor in the meantime, Elliott Management? All sorts of rumours surrounding the plans of this activist investor to try and relist BP maybe in New York, break up the company. What's going on there?
Well, that's what Elliott is good at. And Elliott has been very, very successful in the US. I mean, they were with Honeywell, they were sort of splitting up, saying, that the parts are worth more than the sum of the parts. They don't believe in conglomerates. They have a point with the relisting in the US, which as a UK national, I would find personally very sad. But the capital markets are just so much deeper in the US. So yes, that's something, and they will certainly hammer on the renewables bit.
But also, isn't it about the culture as well? Because in the US, it's seen as a place where the pressure to go green is a lot less, and the pressure on the board and the management to do so is a lot less. Whereas here in London, despite Elliott's plans, other investors would say, hang on a second, you need to get beyond petroleum here, and you're really scaling back on that. And BP has been a takeover target for a while, hasn't it? Because the share price has been languishing, hasn't it?
Yeah, the share price is down 9% last year, whilst Shell was up 6%. So that gives you a good measure of it. Yes, that's partially true, but the whole ESG investing boom, ESG stakeholder boom has also tapered in Europe. So I guess in the end, investors want to see money. So yes, there is less pressure. But there's also less pressure in Europe these days. I mean, you've seen just how many big companies have left the Glasgow Oil Financial Alliance, GFANs. Basically, all the big kahunas are out, have left. So things have sadly changed a wee bit in that perspective.
Okay. Cornelia, always great to get your take on these things. Thank you for talking to us once again. Cornelia Meyer there from Meyer Resources.